Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny. And the Federal Reserve met and they had their announcement today for a Federal Reserve rate hike, which didn't happen. We're going to talk about their summary of economic projections, which is actually the most important thing to come out of this meeting. In my personal stupid guy opinion, kind of interesting as far as their charts, and they update things every few months. But we're going to take a look at the charts.
Two Super Guys Trade Stocks.
I keep thinking of that infamous George W. Bush speech on the aircraft carrier where they had the victory sign behind him. And the actual war in Iraq went on for how many more years after that. But he never said the word victory. He just was in front of the sign that said the word victory.
I disagree. I think the best one was when he said something like terrorists are going to die, and then he's like, watch this golf shot. And then he hits a,
Nuclear.
I should say I was wrong, clearly. I would have bet money that there was going to be a rate hike. There was not. I'm 100% wrong. Here to admit it.
Yeah, it's an interesting thing from that standpoint about where do we call the terminal rate? There's a projection in here. The conventional wisdom used to be that the federal funds rate would have to be above kind of level of inflation, which if you're looking at headline CPI, core CPI, PCE, core PCE, all of those, the federal funds rate is above all of those at this current point in time, meaning that from a level standpoint, it should be adequately restrictive. It's a question of how long we have to stay here, which is kind of where things are evolving to now.
Yeah, that's what I don't like. I would rather a rate hike and stay less than not do a rate hike and stay at that rate for 2 years. I don't want that.
It can be a while. We're going to talk about how long they're projecting it to be right now. So this is actually from CNBC, but basically they take the Federal Reserve speech and they look at how many changes have been made from one meeting to the next. Lots of changes here. Barely any changes at all. It's great. Whoever writes these speeches just has to do copy and paste, change 6 words, and then they collect the paycheck for the next 3 months. It's a solid system.
I agree. That's awesome.
Yeah, they're not hiring though, so sadly that's not going to work out for us. So this right here is the dot plot, as they call it. This is where all the Federal Reserve governors, they all vote in terms of where they think the interest rate will be at certain periods of time. So if you notice right here, this is the most current year, right? They're pretty tightly clustered because they have a good idea where we're going to be 3 months from now. And it looks like it's a little bit higher than we are right now, right? So you're getting just above this 5.5% range. So really, the Federal Reserve is kind of looking at another 25 basis points sometime before the end of the year, all right? It's going to complicate things by a lot.
Do they have 2 more meetings?
I believe 2 more meetings.
Okay.
Next one is Halloween, and then November 1st is the actual date they'll make their announcement. There's some interesting stuff that's going to happen between now and then that can really shape this, though, right? We have federal student loan repayment begins. I'm going to do a separate video on that. But that's going to take a lot of money out of the economy. It's going to start sucking away. I actually want to look at some projections about how much money will be sucked away by that. You also have potential showdown over the budget, where you could see another government shutdown. And the issue with the government shutdown at this particular point in time is that we don't know how many economic indicators will be still reported during that time period. So the Federal Reserve may be, going at this like a blind dick, just pounding away. Channel's really taking a turn for the dark.
Yeah, great. Perfect.
Yeah, exactly. But they are still anticipating having rates in this pretty elevated 4.5% and above range next year. So they're anticipating this being quite a while. I think the first cut right now, if you're looking at a month-to-month graph, it's September of next year is the first time that they're calling for a decrease in the Fed funds rate. The market is right now.
In my opinion, when we look at these graphs, I only hold weight for the following year because there's so many things that can change, and especially during COVID and when they were doing these, it's not even close. I mean, it's just is what it is.
Powell has been kind of consistent with the message for a while, saying that we are in a unique time period where it's hard to really base this upon historical precedents because this is a very unusual, kind of economic cycle because we had a massive pandemic. We had unprecedented inflation. Well, I would say unprecedented, but massive inflation, unprecedented global stimulation of the economy, that we can say, as far as a dollar figure. But, they are still kind of looking at, these GDP things are coming down slowly. You're going to look at each one individually here in a second. Unemployment rate, they're looking at kind of a slow easing here. And then, maybe a mild bump, but nothing too crazy as far as unemployment happening into the future. PCE kind of continue this slow downward trend, kind of getting back to like a more of a stable baseline by 2025. And same thing with the core PCE. They're basically looking at 2025 as being the time period where we're getting back to like normal. So we still have a couple of years before we're actually back in that phase. Each one individually too, they're going to update. So the cool thing here, if you've ever looked at this before, is you see this little dotted like line section.
Yeah.
That's what they voted on in June. All right. And then the shaded blue boxes is actually the most current one. All right. So this is right here is GDP, economic growth. Basically, what they're saying is that the economic growth has actually doubled in terms of their anticipation from 3 months ago.
So this is a great example of why that previous dot plot, I do not hold weight past like 9 months, because look how much changed in 4 months. Like,
Yep. Exactly. There was a big shift. This is probably, I think, the most dramatic shift out of all these little charts, but definitely a pretty considerable, upward surprise in economic activity since the June meeting, according to the Federal Reserve governors. And you've also seen a little bit of kind of a decrease here in the unemployment projection, right? So they were predicting unemployment to be kind of a mid projection here, 4%. That's kind of shifted down to this 3.6 to 3.8% territory. So the economy is doing better than they expected even a few months ago. Right, that's saying something, because how unpredictable this time period has been, and that's within the current year. You go out further, and it's even more so kind of startling, I guess.
Okay.
How unpredictable it becomes.
I'm such a contrarian, because now I'm just looking like, is this the time to short the market?
Yeah, you got to follow the Michael Burry $1.6 billion in options bets.
Still a decent entry.
I get the idea. Following the market this closely and doing a lot of like kind of smaller trades has really made me shy away from that, because it's so unpredictable,
illogical,
that it doesn't make sense.
Yeah.
It's changed its kind of temperament a little bit, if you will.
But with everything you're saying right now, it would be the most illogical for the stock market to go down now. So might go down.
Yeah. All right. I got you. Distribution of participants, PCE. So this right here is where they're expecting the inflation to be. So they're saying inflation is coming a little bit hotter in terms of prediction of where they are from right now. They were looking at this lower range was a little bit more extended previously, whereas now it's kind of bumped up, saying inflation is being a little bit more persistent than they thought a few months ago. So that's kind of like the long and short of what the federal governors have seen over the last few months. And the same thing with the core PCE here. The core PCE has come down a little bit more. That's kind of shifted its trend down slightly from where it was anticipated to be in June.
Okay. I don't really understand why we didn't do a rate hike, because you said they want to do one anyways before end of the year.
They're still anticipating doing one more before the end of the year, like 25 basis points. I don't think it's the level at this point, though. It's how long do we have to stay at this level? That's the main driving question. From a classical economic standpoint, right? Yeah, we are high enough. It's just how long do we have to be here?
I know. I'm just being selfish for my TLT trade. I would have really liked one more now so I can load up, but now I have to wait.
Yeah. I mean, potentially targeting that November 1st meeting date would be, I guess, your next likely window for that rate hike.
I'm just going to sell puts. All right.
Yeah. But, longer term, they're still expecting to be able to come down and cut rates back into this 2.5% trend for like the long-term kind of projection here. So, several years away before we get there. And obviously, as you watch this go out here, it becomes even wider distribution. I mean, look at this, 2025, anywhere 2.3% to 5.6%.
Yeah. I mean, that's absurd. That does not help.
Yeah.
That's not even a prediction. That's just throwing a dart at a dartboard.
Yeah. Or my blind.
Yeah, I know. I was trying to be more politically correct. Yeah, no, yours is better.
That's a better way of describing the entire economics field at this point in time. But hey, it's still entertaining to watch, even if it's hard to predict. Put it that way.
All right, Vinny is gonna break down this weekend. What's the video? You describe it. It's your video.
The student loan thing. Is that what we're talking about? Yeah. So, for those of us that are going back to student loan repayment here, as far as prioritizing, which loans to repay, how aggressive should be, depending on your age, those sort of things. I want to dive into that a little bit more. It's something that's near and dear to my heart right now, that my student loans are repayment. So I'm going to do a separate video about that.
All right, guys. See you this weekend.
Good, thanks.